All right. Okay. Um, I hope you can hear us. Thank you for joining. Thank you for joining us. We have with us this afternoon Mr. Olowu. Welcome, sir. Is the
Thank you.
CPA in the house and is going to be enlightening us, answering our questions on bookkeeping and payroll. I don't know what your questions will be, but we have quite a few that we've received from people, and we forwarded them to Mr. Lowu. He's going to start with those questions, and if you have questions, please add them to the comment section, and we'll be able to address that within the 30 minutes we have. Whichever I can't, if there are some questions we can address right now, Mr. Lowe is going to be talking to you after this. So please join us. Don't leave, don't walk away. We just have 30 minutes. Mr. Lowe, the floor is yours, sir. Thank you so much. Please introduce yourself,
Uh,
and we're waiting for your answers.
Thank
Thank
you so
you.
very much, Temi, for having me today. I really appreciate that. And I welcome everyone joining us on YouTube and Instagram. Really glad to be here today. Yeah, my background in accounting span almost 30 years. I've been in audit and also in corporate accounting. So those are the kind of experience that I bring here this afternoon to kind of answer some of the questions that seems to be bothering a lot of us on this call or anyone that's going to watch this broadcast later. One of the things I've been hearing is people asking, what is bookkeeping? What is bookkeeping and why is it important? So let's start from there. So bookkeeping basically is keeping track or recording the financial transactions of a business. And the financial transactions, there are many, talk about maybe your sales, your revenue, you record that, your cost, your expenses, you record it, and also you have support documents for them. For example, if you send invoices out to a customer, you make sure you keep that, and then you record the revenue. The process that you do to record that revenue, that you record costs, you record expenses, is what is called bookkeeping. Just you're making your book, you're keeping your book to make sure that it's good, it's in good position. But one of the importance of that is this: as a business owner, that gives you a tool for decision making. So if you see how your business is going, how it's doing, you can make decision quickly so that it doesn't uh, happen later and you find out that you don't know what's going on. For example, you may have something showing up, an expense going very high. The only way you can see that is if you keep your books. Because if you don't keep your books, you don't know where the money you're spending are going out to. So you'll be able to see that and say, what's going on here? Or you may even have subscribed to something that you've even forgotten. If you don't keep your books, there's no way you're going to know. So those little things like that, you will know and say, oh, we don't really need this subscription anymore. Why are we still paying it? You want to take that out. Or even on your revenue, if you make sales out or maybe on credit and you have receivables and the receivables are not coming in, your bookkeeping will let you know that, oh, I have this so much money outside that I still need to collect. What do I need to do? Does the amount that I need to collect there, does it require for me to get somebody part-time to help me pursue these receivables? So those are the decisions that you'll be able to make. And I don't know if you watch Shark Tank on CNBC. One of the things that the sharks don't like is when you want to come on, so you're asking for their money and you don't know your numbers as a business owner. They ask you about your numbers. What is your sales for the last year? What are you projecting to make this year? It's your bookkeeping that can give you the tools to be able to know your numbers. So as a business owner, you must be able to speak about your financials, about your numbers to anybody. You could even happen to have an elevator pitch. You find somebody in the elevator and say, oh, what do you do? And you tell them what you do. And the person says, I would like to invest in that area. you should be able to tell them about your business quickly before the elevator door opens, and tell them what. And we're not asking you to have the knowledge that a CPA we have, in accounting, but you must know your numbers. You must know if you find a positive or a negative number in your financials. What does that mean? Of course, well, that depends on where it shows up on your financial statement. So those kind of things, your bookkeeper or your accountant can hold your hand and teach you how to do this. This is something that I do for my clients, because what you want your clients to focus on is growing their business, not having an headache, on, oh, is my book kept? Is this thing correct? Am I doing this according to the law and all that? You don't want that. Or you want them to focus on growing the business, but at the same time, you want to educate them on what their numbers are, what their finances are. So that's one of the questions that I think is bothering people. So it's really, really very important. Another question that we got was, what does a business owner need to know about bookkeeping and taxation? So I think we a little bit cover that here right now. But but on the taxation aspect, so the taxation depends on the entity that houses your business. There are different entity forms. You could be a sole proprietor. A sole proprietor is somebody that's the lowest level of the entity. You have really not too much interaction with the government. It's just like you are the company, you are, so everything that you do is just commingled together as a sole proprietor, and your business and everything is commingled together. But then when you file your taxes, your 1040, there's a Schedule C where you can list your income and expenses in there. So that's the lowest level. But then you also have LLC. One thing that the LLC, the limited liability company, provides for you is, it kind of limits your liability uh, in that company. So if anything happens with that your company is sued, the LLC, so the liability that you owe would be limited to what the company LLC have. So and in taxation for that, if you have multiple members in the LLC, you will need to form what is called a Form 1065, which is like a partnership income. So on the partnership level, you don't pay income taxes. Whatever is generated on that LLC is what is going to be distributed to the partners. And then those partners will go ahead and pay taxes on their own individual tax filing. The other one is what is called S Corp. So an LLC, S Corp is a designation that you elect. So an LLC may elect to be taxed as an S Corp. So if you take that decision, then there's some other things that goes with that. There's also a C Corp. But I mean, we could talk more about that as we go here. Or if you have any question on that, you can reach out to me on that. And if you're an LLC and you are a sole member of the LLC, which means you don't have a partner, you're just the sole owner of the LLC, you will not be required to file a Form 1065, which is a partnership. You will need to again record your income and expenses on a Schedule C, when you file your individual taxes. And as we go along, like Temi said, if you have any questions or anything that I'm talking about that you want clarification, please post it in the chat so that we can take care of that. Then someone also asked, what types of financial records should I keep? What type of financial records should I keep? Well, everything that you use to generate all your financial transactions, you should keep them. For example, if you have sales invoices, vendor invoices, your bank statements, make sure you keep all that. And today is very good. Today you could keep all your stuff in the cloud, make it safe. But you really need to keep all that. And some important documents also that you need to keep in your business is you need to have a business plan. Now, the business plan might be informal, but what are your plans for this business? What do you intend to achieve? Just write it down. It may be informal when you're using it but internally. But then, if you want to approach a bank for finances, they may ask
Mhm.
for a business plan. You will need to actually do an official business plan that will show, plans, strategies. What are you looking into, and all that. And then, of course, you should have your income statement. Uh, Again, your income statement is a statement that shows your sales, the money coming in for you, and also your costs and expenses deducted from that income to now see whether you make profit or not. In a lay term, if your cost and expenses is more than your income, you'll be operating at a loss, which
Mm.
means you're spending more than you're bringing in into the business. And of course, the same thing goes for us as individual. If you spend more than you are bringing in as an individual, you are
Mm.
going into debt. You are either using credit card or something else too, and that's not a good way to be. And basically, cash is the lifeblood of a business, and they always say cash is king. If there's no
Cash.
cash in a business, it's the lifeblood. The business may die, even if you try to prop it up with debt and all that. At some point, it will not be able to survive. So you want
Mm.
to make sure you strive as much as possible to make sure that your business is profitable. Now, if you're just starting at the beginning, you may incur some cost, and you may not, and depending on the type of industry that you are in, you may not be able to break even immediately when you start. So it's
Mm.
understandable. You may incur some losses for some time, but then there has to be a plan to turn that around at some point. You will know the reason why you are making the losses, because you are investing in these, you are doing all that. That's why you are incurring losses. But at some point, you need to turn the corner, and you should know and plan for when you're going to turn that corner.
Mm.
Another document you need to keep is your balance sheet. Your balance sheet typically is just what you have, your assets and your liabilities. Your assets are things that you bought into the business that you could use, maybe for less than 12 months. And if you use them for less than 12 months, you call them short-term assets. But if you use them for more than 12 months, those are long-term assets. So, for example, um, your short-term assets uh, could be your inventory. Like maybe you buy some things that you use in your business, and you're going to finish it 9 months, less than 12 months. Those will be short-term assets. But the long-term assets would be like maybe fixed assets. For example, if you have a vehicle, if you
Mm.
have computers for the business, if you have equipment for the business, which we're going to use for more than 12 years, I mean, for more than 12 months, those would be long term assets. And you do get benefits, tax benefits from those assets when you file your taxes. Uh, Another thing you need to have is your cash flow statement. One of the documents you need to have there, your cash flow statement that shows um, how the cash has been used in the system, uh, you know, how the cash, where the cash is coming in from, and how it's being used. That's a cash flow statement. And then you should also have if you are selling on credit, you should have what is called an account receivable agent. What that means is you have a list of customers, you have
Mm.
the time you sold to them, the date of the invoice that you sent to them, and then you start aging that invoice. So you can see, okay, oh, you've given this invoice out to this customer for over 6 months now. They've not paid you, you know.
Mm.
So you're like, what's going on here? And if we say cash is king, you want to find a way to get all those cash into the business. So whatever you need to do to go, after those, you need to do that. Then also accounts payable agent. Payable is what you pay out to your vendors. So you are
Mm.
aging, okay, I have this invoice from this vendor and I have not paid it, for the past 2 months. It's overdue. You got to watch that too, because if that vendor is providing you services and you are not paying them their bills, they may cut off the service, or
Mm.
if they're supplying you products, they may not, listen to you again. They will just say, we cut it off. And if that happens, it has a huge impact on your business. So you want to watch that also. And then also a budget report, just as simple as it is. You want to budget for what you think your revenue, your sales is going to be for the year. What do you have in the pipeline? Are you talking to some customers that you think you're going to convert? You can put all that in your, in your budget. What do you think your cost is going to be with the growth of your business? Do you need to employ one or two? How much are you going to pay them? Or do you just need temporary people? How much how long are they going to work? How much are you going to pay them per hour? All those things, you budget for it in your budget, so that it's like a plan that this is what I want to do, and you kind of stay the course, at it. The next question that I have here, from someone says, what advantages does one get for having properties in LLC while not a business but an individual? Then he says, how would your taxes be affected when you have your primary residence in LLC? The main advantage of having your primary residence in an LLC is liability protection. That, okay, if nobody will go and sue you or want to do debt collection and then want to take your home, especially if you fully own the home, there's no mortgage on it. But there are myriads of tax implications, for that. As an individual, if you have your home as an individual, there's an exemptions that you take that will not be available for you anymore if you put it in an LLC. For example, the mortgage interest deduction, you're not going to be able to have that anymore. The capital gains tax deduction, if you sell the house, you're not going to be able to do that again because now it's under the LLC. But the tax effect really it depends on your specific situations. And at this point, I would say you should contact, a tax professional or a lawyer before you take steps. But generally, an LLC is best suited for, real estate as a business investment. Not putting your individual home in it. I think it may be better to put your primary residence in a trust, rather than in an LLC. So again, do that to put your home in a trust. You need to talk to a lawyer, a tax professional, also to look at all that. I think the next questions that we have, again, if you have any questions, whatever I'm saying, you have follow-up questions to it, just post it in the chat there, and we'll try as much as possible to address them. The next question is say, how do I set up payroll? How do I set up payroll? It's really, really it's a very good question, because you don't want to have employees and just be cutting check for them and not thinking about the tax effect of that. So, because the employee that you have, it could be a W-2 employee, which means you control how they work and all that, and you're supposed to be deducting taxes from them and remitting it to the government. And then it could be a contractor that at the end of the year you will need to give a 1099 to. Even though you are not deducting taxes from their pay, you also need to keep a record of what you are paying them, so that at the end of the year you can issue them a 1099. So how do you set up the payroll? There are several payroll software out there that you could use, and depending on the type or the level you subscribe to, you may still need to run your payroll yourself, depending on which level that you do. But on the other hand, what our payroll services provide is, we'll take care of all of that for you. But you as the owner or the manager, you still have to approve the hours maybe that your employee work for you. But we'll take it up from there, and we'll give you, a personal, relationship. You can call and talk to us personally on anything. If you need to add new employees, You just send us the information. We go ahead and add it for you. But if you use payroll software that you buy off the shelf, you may need to be adding those yourself. But then it's really, really very important because you need to file all the necessary taxes and the forms, at the time that they are due, so that you don't run into, an issue. One thing as a business person that you don't want to do is to get into trouble with the government on taxes.
Mm.
You must not allow that to happen,
Mm.
because they could shut down your business. So and you don't want that. So from the get go, make sure you take care of that. Um, the next question here is says, what can I do to manage my cash flow better? How can I plan for cash shortages? Like I said earlier on, cash is king, is the lifeblood. So some of the ways that you can make sure that you don't run out of cash is,
Mm-hmm.
want to create a cash flow forecast. A cash flow forecast is, that, okay, I'm looking at how in January, how much money am I expecting from this business?
Mm.
What is the cost? There's some costs that are fixed. If you have full-time employees that you have to pay, you have to put those costs there. If you're renting a place, those costs they are fixed costs. There's nothing you do, those costs have to go, unless if you lay off a staff or anything like that. But rent and things like that, you have to go ahead and plan for that. So when you put out that forecast, the forecast will show you, this is what I'm expecting in January. This is the cost I'm expecting to spend, and then I'm expecting this amount of money, and then cash. You carry the cash from one period to the other and see what additional cash you are having. So that way you kind of increase your cash, and you can do that, on a monthly basis, on a quarterly basis. And also, again, I think I mentioned this earlier on. If you sell products or services on credit, you want to conduct customer credit checks. So don't just go ahead and just sell to people in credit. Okay, yeah, I'll provide this service for you. You can pay anytime you want, or you just, things like that. You don't do that because it impacts your cash flow, because then your cash is not coming in. But if you conduct a credit check and say, okay, this person you want to, afford, credit to, they are credit worthy, so you can know that you get paid, then you can go ahead and do that. Also, you want to watch your inventory. For people that have inventory, you don't want to keep too much inventory. You don't want to keep inventory that you don't need.
Mm.
And at the same time, you don't want to keep too less inventory to the extent that you cannot fulfill the commitment that you have to your
Mm.
customer. So
Balance.
so you have to kind of create a balance in there. And also, one of the other ways that you can increase your cash, manage your cash flow, is you can also have discussion with your vendors for favorable, terms. You know, if your vendor is always asking that you pay in 15 days, you can talk to them. Hey, I would like to do net 30. I want to pay, in 30 days or in 45 days. If they allow you that, if you get that kind of terms, then of course that means the money that you would have spent this month, you can spend it next month, and so forth. Alrighty. The next one, and Temi, you can tell me when to pause.
Yes, sir.
Okay.
I do
Okay.
that.
So the next one we have here is, a number of people are, they are sole proprietors. How can they benefit from a different structure?
Mm.
If they have an LLC, how can they benefit from having an XS Corp? Um, then it says, what is the best business structure and how can they use it to meet their goals? So we have kind of three questions there. So let's start from the first one. It says, sole proprietors, how can they benefit from a different structure? Um,
Mm-hmm.
if you're a sole proprietor, like I said, you and the business, you are one. So if you get sued for doing something as a sole proprietor,
Mm.
they can come after your house, they can come after your assets. You're just one. So
Mm.
that's the thing about the sole proprietor, right? But then the benefit in there is just that, or you can do as you wish. You are the owner. You are all in all. You don't have to have any other partner. But then you just have to know about the you know the the, the liability that you open yourself to. But when you do the LLC will kind of prevent people going after your assets and all that. I see a question shows up in there. It says,
Okay.
how soon can you help to set up payroll? Does my LLC have to be in the same state with your firm for you to provide payroll services? Or no? So yeah, we can set up payroll. I mean, quickly as you want it, quickly as you want to start paying your staff, and we cover all the 50 states in the United States, so we can do that for you. And like I mentioned earlier on, we will set everything up, your taxes being paid, and then at the end of the year, if you give W-2, we create all that for you at the end of the year for your taxes. Thank you so much, Mr. Miwa Falano. So we're rounding up now.
Yes, yes,
Okay.
yes.
So we have questions, but I think we'll come to them some other times. Thank you so much.
Thank you, sir. So personally, I have a question.
Okay.
While you were talking, you mentioned that if you don't pay your vendors, the vendors can say they don't want to come again and stuff like that. But is there possibility for the vendors placing a lien on that business for not paying for that service? And
yes, there is.
There is.
There is.
So it's important to avoid that.
It's
Anyway,
really important. And talking about the lane, there's what they call the mechanic lane. Even it can be a very small amount. It could even be an electrician that comes to fix something in your business, and it may even be for $300, and you didn't pay the guy. The guy can go to court and put a mechanic's lien on your business, and they can come and shut down your business because of $300. So
if your house is on that business, they can shut down your house. Is that what you're saying?
They can shut down your house. Honestly, it's a very, very serious thing that the city does not, the state does not, they don't care to sell your building and pay that guy $300 and give you the rest. So and the reason why they do that is that they don't want the little guys to be trampled upon. That's why they call it a mechanic's lane. So because you are big, they don't want you to just deal with them anyhow. So anybody that is working for you, make sure you take care of them.
Thank you so much, Mr. Olowu. Thank you for your time. We're grateful. I wish that we have more time.
No problem.
But we're probably going to bring you back again. Guys, please get his information and reach out to him if you have questions. And we'll see you again next week. Please stay in touch. Thank you so much, Mr. Olowu. We're very grateful.
Bye, everyone.
Bye.